Meyer Blue, goodbye or goodbye. Hello everyone, welcome to yet another episode of Choosing the Right Launch. And for today's episode, we'll be back at my favorite location, District 15, to cover one of the freehold developments launching very soon in Meyer Blue. After analysing it with our QPE framework, we will review at the end of the video if it's indeed a good buy or goodbye. So make sure you stay all the way to the end of the video. But before we start, I haven't been saying this enough in my videos, but helping me like this video will help a great deal with the algorithm. So please hit the like button and subscribe if you're not a subscriber yet. So let's start. Brief introduction about Meyer Blue. It is the en bloc of the former Meyer Park by UL and Singland back in February of 2023 for $392 million. Now, including the land betterment charges and whatnot ever, the land rate works out to be about 1,668 per square foot per plot ratio with a break-even of around 2,725 per square foot. Now, there will be one block of 226 units comprising of 2 to 5 bedrooms sitting on a 96,000 square feet piece of land. Now, given the shape of the land is similar to that of Meyer Mansion, which just TOP about 6 months back, the site plan of the development is done in almost similar fashion to that. When I first saw it, I'm like, isn't it the same? But then again, given the shape of the land, I think this is about the best way to design the development. Units are facing either the northern side of the east coast, where you get unblocked landed views of the Mountbatten landed enclave, or the southern side, which faces the expressway, or if you're on a higher floor, boasting an unblocked sea view. Now, fun fact, if we are covering this launch 4 or 5 years back, I would say that the sea views are what I call A1 guaranteed view, because right in front is the East Coast Park. The view, I guess, will probably stay as what it is, but that changes now with what I call probably the real East Coast plan, the Long Island. Now, what is the Long Island? It's a stretch of land that is set to be reclaimed over the years or decades to combat rising sea levels and also probably for coastal protection. With the new reservoir being wrapped around the reclaimed lands, I think there's no guarantee as to whether there will be any developments at the edge of the sea that will obstruct your view. So for someone like me who specializes in the East, I have no answers to the question that many of my clients have, which is, my sea view guaranteed or not guaranteed? I have no answer. However, I personally believe that the chances of buildings coming out in this stretch will likely be the ones sitting at the former golf course. Why? The center portion of where the reservoir is probably where more recreational facilities will pop up, but that's just my guess Anyway, I believe the Long Island concerns will be a problem future generations will face because land reclamation itself usually takes decades, just like how the Marina Bay area took more than 20 years to complete and several years after that for the lands to settle before the first project was being built. Anyway, back to it. The QPE framework, first circle, quality, land size, facilities, and facade. Now, this lot sits on a 96,000 square feet piece of land. Is it a big development? Clearly not. Is it a small development also? No, but it's definitely a development leaning more towards being small. However, 96,000 is good enough to get you proper facilities. Maybe not full, but at least good enough space to work something good out. And thankfully, UL has managed to do just that. Now, you got one lap pool separating the development from the highway, obviously to create a setback to cushion noise from the expressway. A gym beside it, another lazy pool at the front towards the entrance with what looks like one big function room overlooking it. And then you probably have the highlight of Meyer Blue, the Sky Gym on level 27 alongside the club lounge and Sky Lawn. The building looks just like any other modern upmarket launch. Glassy, but with a mix of some gold trimming and bluish glass. I think it's just about what you should expect for a property along Meyer Road. So for the first point, it just about checks out. Point number 2, layout. Alright, as mentioned, we do not have any 1-bedders here or 2-bed, 1-bath. We start straight with a 2-bed, 2-bath, 667 square feet dumbbell layout. Now, if you look at it, semi-enclosed kitchen, AC latch at the front as usual. Very safe configuration, but a bit too safe. Feels a bit like mass market. And I only have one issue here, and there's two sides of the coin to this. The size is a bit too small for a property located along Meyer Road. How do I say? It's like, for those of you who know, Meyer Road is the most atas locale in the entire District 15 neighborhood. Now, the people buying into this area usually are the more high net worth individual. Can they accept getting a unit as small as this? I don't know, but I lean more towards them complaining that it's a bit too small. The other side of the coin is because the size is small, the overall price tag drops significantly. Now, developers are obviously trying to sell it at about the same quantum as the other 2 bedrooms in the area, but because the area is smaller, they can attain the higher per square foot that they want. And one other small fun fact here, all the 2-bed, 2-bath are all facing the south. Very, very smart. Why smart? Because almost all the 2 bedrooms along the Meyer Road faces the landed. I don't recall any 2 bedrooms facing the sea, and at Meyer Blue, if you're a sucker for sea view, you're about the only one that faces that. Hence, the higher per square foot could be justifiable. Very smart indeed, because I think someone at UOL has clearly done their research. Okay, next one, 2+ study facing landed, no big deal. Skip. The 3-bedroom compact, 990 square feet dumbbell layout facing the sea. Yet another interesting move, obviously to cater to the crowd who are fan of the sea facing, and with the smaller size, the quantum wouldn't be that high. But the AC ledge at the front really kind of kill the vibes. 3-bedroom premium unit, also facing landed, very standard portrait layout, no big deal, skip. Now, the 4-bedroom with private lift facing the sea, built like the layouts you see at Grand Naman, 1432 square foot layout, or also similar to Tembusu Grand, but one thing you need to take note, Tembusu Grand got no private lift. And I got a hunch this layout will be quite well received, as you got 4 bedrooms, although it's on the smaller side, overlooking the south and with a quantum that likely matches similar 4 bedrooms in the neighborhood, but of course not, the older ones are way bigger. Okay, the next one is the 4+ study with a landscape layout. I mean, who doesn't like landscape layouts, right? Rooms a little bit on the smaller side. Actually, sometimes I don't get it. I know new launches, you really don't get much big bedrooms, but when you're talking about a big ticket item like this, at least give your clients 10.5 to 11 square meter rooms. The target audience will very likely pick on this one. And why is the AC ledge in the front? Then the facing is towards landed some more. Personally, I think the previous 4-bedroom has a better overall configuration, and with the better facing, I think that the previous 4-bedroom will sell better than this 4+ study. And of course, the final layout to look at, the largest one, I call the final boss, with the exception of the penthouse, the 5-bedroom units. With the largest non-penthouse unit, it has to be, of course, the sea facing. Portrait layout again, love the kitchen with the island in the middle. The living room and kitchen does look like the cellar of the 5 bedrooms at Wharton House. Same. And also the essence of this layout resembles that of the 4+ study, but instead of the study, you get a proper bedroom 3 that looks like it is just slightly smaller than the junior master. Bedroom 4 and bedroom 5 as usual, very sad. From the looks at it, it should be under 10 square meter and slightly larger than all the other units or other layouts in Meyer Blue. Same thing, I think the atas people will complain about this. Decent size master, lucky this one got no AC ledge in the front. So overall layout, very normal. Nothing too special, very standard. The only flaw is, as I mentioned, I think the rooms for the larger units should really be much bigger. Our landed downgraded friends from Mountbatten confirm complain one. Then you are tempting them to go buy the older resale units, right? Point number 3, location, MRT and amenities. This is Meyer Road. Truth be told, there's not much facilities. You want facilities, you can try looking for a house at Marine Parade or probably wait for the Emerald of Katong or something like that. Good thing is that the MRT is already up and running, and Meyer Blue is located right in the middle of the Tanjung Katong and Katong Park MRT. You fight with your wife, spouse, partner, whatever it is, one end can turn towards the left towards Katong, and then you can walk towards Tanjung Katong. Good, right? Do you actually know why Meyer Road is very popular? 2 reasons. Number 1, the rich man enclave of Mountbatten hugs this entire road. Secondly, this is about the only street that is like a single loading whereby you will get unobstructed views on the north and the south side, giving you this very open view of the area. Now you go Tanjung Road, you don't get that. You go Amber, area or parkway, you also don't get that. You get the opposite of that. Very claustrophobic. And these, of course, are mainly the two reasons why most atas people in the East favors Meyer Road. Somehow has this class. Point number 4, views. Now, sea view on the southern side, landed views on the northern side, all unblocked. What more to ask for? But take note, the sea view is buy one, get one free. You buy one sea view, you get the noise from the traffic free. If you don't know this point, you are new probably to the East Coast. All in all, circle number 1 of quality, Meyer Blue just about clears this, in my opinion. Not by a clear mile, but decent enough quality to ensure that the resale value stays strong probably after X amount of years. Now, to our next circle, the exit strategy. Since I spend so much time on the quality of Meyer Blue, I shall shorten for you this. I always say this one thing about East Coast properties: you are never short of suitors. That is unless you build some crappy projects. And Meyer Road has only that much of a supply. No government land sales, so if you not get something new, you have to wait for en bloc to happen, either in Atria, Hawaii Towers, or probably Peach Garden. Or if the Lee Foundation decides to sell the piece of land that is located just beside Meyer Blue. Very, very low supply. And who are target audiences for Meyer Blue? Not mass market investors or end users for sure. Because of the premium being paid for it being a freehold, you expect a fair bit of landed downgraders exploring the option of buying the larger 4 to 5 bedroom units. Or the kids who are living with their parents around the Mountbatten area also, very rich and probably want to stay close to their parents. You will get a lot of these at the Meyer Road Enclave. And then you will have the middle to high income earners coming in for it too. Now, third point, transformation doesn't really matter so much, but if I really have to look forward to something, as mentioned at the start of the video, the Long Island project and the plans for the golf course will reshape District 15. Next one is schools. No schools, never an area popular for schools, so not crucial to not have. Okay, so second circle exit strategy, short and sweet, District 15 properties will always have its solid fan base. Unless you build a boutique development, then that one is a different story. Now, this brings me to our final circle, the most important circle, which is price. Ha ha ha. This one, I can tell you, don't play. Is it cheap? It is not cheap. If your agent tells you this is an undervalued or cheap property, please ask them, go and fly kite, okay? The break even for Meyer Blue is 2,725 per square foot, which means that they can launch at any price above that if they wish to, but a safer price range given to us is that you will start from 3,000 per square foot and probably all the way up to 3,500 per square foot for sea facing on a higher floor. This one, I don't know what price they're going to launch until we see on launch day itself. So let's set a range of pricing to stress test this, shall we? 3,200 to 3,500 per square foot for the south facing the sea, and 3,000 to 3,200 per square foot for the landed facing. Fair enough? But what I can do here is to give you one more important thing, which is context. Now, what is context? Context in the form of what the market is digesting for the resale properties along Meyer Road first, then I will expand outwards towards the other launches nearby. Firstly, all the 2 bedrooms along Meyer Road are all commanding easily above $2.2 million, and with some even hitting 2.4 and even upwards. Now, if your 2-bed 2-bath calls for between 3,200 to 3,500 per square foot, the quantum will be easily between $2.15 to $2.33 million. Now, the per square foot is shocking, I understand that, but guess what? The quantum you are paying is the same range as the older resale, but instead, you are the only one facing the sea. And so, I personally think that this layout will sell the best. I mean, you tell me, obviously this is like the cheapest one, but I'm just sharing with you the reasons for it, not only just being the cheapest And this is my definition of context. You cannot just look at the per square foot and say, wow, it's expensive. I mean, it is really expensive if you look at it purely from a per square foot basis. But the entry level will decide if it sells well or not. 3-bedroom compact at 3,200 to 3,500 per square foot will be between $3.168 to $3.465 million sea facing. Now, I only have one issue with this. I am still not convinced that the end users will take too well with a 3-bedroom compact, even though you have a great view. No maid's room and no toilet feels a bit off for an atas area like Meyer Road. So I'm not sure. 3 bedroom premium should be between 3,000 to 3,200 per square foot at 3.423 all the way to maybe 3.65. This is a landed facing. Now here comes another context. 3 bedrooms along main roads are selling between $3.3 to $4 million. So the 3 bedrooms are built in such a way it manages to squeeze into the price bracket that most 3 bedroom buyers will pay in this neighborhood. Just that we get lesser space as compared to the older ones. And lastly, the 4 bedroom resale properties are trading between $4.5 to $6 million, with the highest hitting $8 to $9 million in Sovereign and Meyer House, but those are on its league of its own. Okay, so 4.5 to 5.5 is the price brackets that the buyers have been paying in recent times. With that, the nice sea-facing 4 bedroom layout that I like, the 1528 square feet should sell probably between 4.8 to around $5.35 million. The 1733 square feet 4 plus study should be between $5.2 to $5.5 million, all still falling within the range of the neighborhood. Only the 5 bedroom 1905 square feet will creep above that at between $6.1 million to perhaps $6.6 million. But take note, the entire main road has no 5 bedrooms. The closest we can get is the 4 plus study at Alto, which transacts at around $6.3 million. So same thing, the 5 bedroom will likely be in the reasonable entry level range. Now, what if I were to pit myself against all the other new launches nearby? No fight lah, Our location is like head and shoulders above all the neighboring competition. But let me set the record straight. I'm not saying Meyer Blue is better in every way. I'm just saying no fight from a product point of view. It is very, very subjective because this attracts a different group of buyers from the likes of like Emerald, Katong, or Grand Diamond, okay, or Tempus Grand. Well, because it's freehold lah. If I have to really compare with something, then it has to probably only be continuum lah, reasonably, right? Which sells from between 2,600 to 3,000 per square foot. Or the upcoming Arena East at Fort Road. But if you know the East well, this is really not apple to apple comparison. I mean, no disrespect to the people at Continuum, okay? This is Meyer Road, and that one is more like Paya Lebar than the East. It's like comparing a property at Ardmore Park versus another one maybe somewhere at Stevens Road or closer to Newton Circus. So in actual terms, I think Meyer Blue will run on its own, and I think the closest competition we will have down the road X amount of years later will be the recently TOP Meyer Mansion. They will be like the brothers and sisters of Meyer Road. Consumers will definitely check both of them out to compare because visually they look similarly the same. At this point of recording, we are already expecting the preview of Meyer Blue to start on the 21st of September, with booking set to take place on the 5th of October. If you're someone who is planning to explore the Meyer Blue and wish to do so with someone who knows the entire area inside out, you can reach me privately here. So, in summary, Meyer Blue, goodbye or goodbye? It's actually a mix of the both lah. It is a good buy if you are someone who wants to flip in the shorter term, like those 3 to 5 years type of horizon. Because if that's the case, you are probably better off waiting for the upcoming Emerald of Katong or even some OCL new launch. Also, if you're someone who wants schools nearby, amenities near MRT, now when I mean nearby MRT, I mean like under 5 minutes lah, then this is a good buy for you. Because the price tag here is really not for the average Joe. Now, however, if you're someone who wants to buy something to hold for long, be it for own use or for estate legacy planning purposes, this is the kind of rare freehold properties that doesn't come by very, very often, especially the likes of it being located along Meyer Road. If you have deeper pockets, the 5 bedroom one will be an interesting pick given the scarcity of large floor plate. It's always a crowd puller. The 4 bedroom 1528 square feet I think should be also fairly popular choice too, alongside the 667 square feet 2 bed 2 bath. Ultimately, the pricing eventually will determine whether it's too luxurious of a choice or not. Even if it's for estate legacy planning purposes for long term, you can't deny the fact that to pay 3,500 to 3,600 per square foot will mean that you're obviously investing too much emotions more than seeing the investment value of it, right? Likewise, a low floor facing the north with a lower per square foot, like hopefully under 3,000 per square foot, might actually see more returns in the shorter run than that of the better sea facing units. The price will matter. Personally, for the first time, I'm leaning more towards goodbye, then goodbye. Well, unless you are someone who plans to live in it eventually, because I'm not someone who will pay $1,000 for a branded Gucci t-shirt, because Meyer Blue is exactly that. A branded product. It's not going to be cheap, but hey, to each its own.